Today's main topic is, of course, the rapidly rising gold prices. The gold ounce price has reached the level of $4,150. Silver has seen the $53 level, and banks have started to announce their forecasts one after another. Citi announced a $55 silver target for the end of 2026. In my opinion, that's a very optimistic forecast. There is still a long way for silver to go until the end of 2026. Let's emphasize this point first. Societe Generale also announced its forecast for gold and set a $5,000 gold ounce price for the end of 2026. As you know, Goldman Sachs had also changed its gold target to $4,900. As you can see, almost all banks and all investors predict and say that the upward trend in gold will continue. Of course, there is a basis for this. There is a reason for this. That's why geopolitical risks, the Fed lowering interest rates, and the strong demand for gold from central banks. Another source of demand has been added to this. Investors are pulling out of government bonds and currencies. So where are they going? Most likely they're moving into silver and gold. They are also increasing their gold and silver reserves. We will discuss all these details. We will talk about both gold and Bitcoin. At the same time, we will also try to evaluate what is happening in the global economy for you. Welcome everyone. Gold has reached the level of $4,150. Silver has reached the level of $53. Citibank has also announced its silver forecast of $55 by the end of 2026. There are already only $2 left to reach $55. With the increasing demand from industry in 2026, I expect much higher figures. Let me emphasize this point. In other words, I believe that in 2026, the price of silver will be close to $100. Also, in my opinion, in 2026, the ounce price of gold will exceed $6,000, friends. After $6,000, we will start talking about new targets. Of course, banks are acting more cautiously. Most recently, Societe Generale announced its $5,000 gold forecast. As you know, Goldman Sachs also had a forecast of $4,900. Almost all banks' forecasts are now hovering around the $5,000 level. Why? Demand for gold is increasing, and the diversity of demand for gold has also started to grow. Central banks, ETFs, funds, individuals, and now both regular and large investors have started to turn towards gold and silver. How do we see this? Because these major investors are moving away from government bonds and international currencies. They are reducing their positions there. Where is this money going? It's either going into Bitcoin, friends, or into currencies like gold and silver, or into stocks. I also believe that some of it is going into stocks. Let's set that aside for now. We can say that there is a very strong flow, especially into technology stocks and artificial intelligence stocks. We can easily say that the AI rally is also driven by this. We also see that investors are turning to important alternatives like precious metals such as silver, gold, palladium, and platinum. Therefore, a new wave of buying is coming. When we look at geopolitical risks, as of the weekend, peace doves were released. But will this continue, or is it possible that tensions there will persist? This remains on the table as a geopolitical risk. Although the US-China tension is described as a trade war, it actually presents itself as a geopolitical risk. Despite all these commercial pressures and measures, China's exports are increasing rapidly. Why are China's exports increasing? Because before possible tariffs even come into effect, many major companies around the world, especially in America, are sourcing goods from China with the lowest possible taxes, friends. This in turn leads to an increase in China's exports, pushing them to historic record levels. Look, this is also one of the important reasons for the rise in gold prices, because China's foreign exchange reserves are rapidly increasing, and China is directing these reserves into areas like gold, silver, palladium, platinum, or other raw materials. We also see that China is making large purchases and imports of many important raw materials, especially iron ore and copper. Of course, they're not doing this just for fun. They're buying these materials, using them in production, and then exporting them, my friends. As China increases these purchases, boosts its exports, and grows its foreign exchange reserves, its demand for gold will also rise. Because the People's Bank of China doesn't seem very happy about having such high dollar reserves. Let me also say this. China is not doing this transparently. We can't see how much gold, silver, platinum, or palladium China is buying. No one can see it. We can only make guesses. We know that China's purchases are actually much higher than even our own estimates. This also continues to push gold prices upward. Is it just China? No. Countries like India, the United States, and Russia are also increasing their demand for gold. On the other hand, there's also the Fed story. Most recently, there was a statement from Fed Governor Waller. He said our priority should be employment, and that the deterioration in employment is, in his opinion, one of the most important problems. In fact, he said that interest rate cuts should become even more aggressive. As you know, Waller is one of the candidates being considered for the Fed chairmanship. That's why he makes statements that are closer to Trump's views, just like Moran does. As you know, Moran is another governor appointed to the Fed by Trump. He also doesn't really stray from Trump's words or policies. He often says that aggressive interest rate cuts are necessary. These statements show us the following. As of May 2026, there will be very significant, very fundamental changes at the Fed. People closer to Trump will be appointed to the Fed, or those who are currently close to Trump will continue to remain within the Fed. This will make Trump and his administration stronger within the Fed. As Trump himself has said, a majority will be secured at the Fed. After a majority is secured at the Fed, interest rate cuts will begin to be made much more aggressively and rapidly. On those days, we will see significant volatility, not only in gold prices, but also in other precious metals, as well as in Bitcoin and stocks, especially in the United States. However, the artificial intelligence rally is not an indicator of that. I especially want to emphasize that. The artificial intelligence rally can be thought of as an investment in the future of technology. In fact, it can be considered similar to investing in the early days of Amazon, the early days of Google, the early days of Facebook, or even the early days of Coca-Cola. Artificial intelligence still has a long way to go and much further to advance. And there is fierce competition and massive investment here, my friends. This brings many chip manufacturers, especially Nvidia and AMD, as well as processor and software producers, to the forefront, and they will continue to do so. Let me put it this way. Right now, there is a prevailing belief that a bubble has formed, especially in technology stocks. However, friends, we might still be at the very beginning of the road. Just because the price of something rises doesn't mean it has reached its peak. It's just like with gold. Gold prices may have reached $4,150 and may seem very high. But the conditions are such that it looks like gold prices will head towards $6,000 in the near term. Will $6,000 be the peak? That's what I'm not sure about. Because reasons keep piling up one after another. It seems as if gold prices could go all the way up to $10,000. We can say the same thing for Bitcoin as well. Bitcoin is currently hovering around $111,000 today. But is $111,000 the peak for Bitcoin, or is it the new bottom point? With these interest rate cuts, the new wave forming in the market, and the demand for artificial intelligence, will Bitcoin surge toward $300,000, $400,000, or even $500,000? When we look at altcoins, where will important tokens and coins like Ethereum, Solana, and Alex head toward? What kinds of opportunities will new blockchains create? As you know, some of the world's and America's most important banks, such as JP Morgan, Bank of America, and Citibank, are coming together to work on a new blockchain and, at the same time, a new stablecoin. We might still be at the very beginning of the road, both in terms of Bitcoin and other altcoins. Don't draw this conclusion from what I'm saying. Don't assume that whatever we touch will skyrocket like crazy. In fact, let me add this as well. Most of the tokens or coins you currently see in the crypto space will probably disappear. In my opinion, a large portion of the money invested by people there will also disappear, but a significant part will continue to rise in value. The disappearance of those cryptocurrencies will lead to the remaining ones rising even further, pushing them toward new peaks. Opportunities may have just begun in the crypto space, the gold market, and also in technology-focused stocks in the stock market. Let's emphasize this point. Is it only technology stocks in American markets? No. In my opinion, in the coming period, there will also be significant movements, especially in banking and industrial stocks. A decrease in interest rates will increase the profitability of banks. On the other hand, lower interest rates will further stimulate the industrial sector. These two sectors will announce significant profits, which in turn will lead to a rapid rise in these stocks. That's why the story may have just begun in the American, European, and emerging market stock exchanges. Of course, there will be challenges along the way. Again, Trump will come out and make statements about China. This will trigger significant waves of selling in some markets. But it won't mean a change in the main trend. Look, I mentioned China to you just a moment ago. Imports of iron ore, copper, and coal have reached their highest annual levels. This means that China's industry and production will also grow and develop rapidly. It also means that the technology war between China and the United States will intensify and escalate. But these wars won't bring either side to collapse. This should be seen as a competition, and the growth of both countries naturally indicates that there will be significant movements in Asian and American markets. That's why I think it's beneficial to follow the process very carefully. Yes, friends, we've come to the end of this video. We'll be together again in the next video. Until we meet again, take care and stay happy. Take care of yourselves. Don't forget to like, share, comment, and subscribe. And if you support our channel with super stickers and the join button, I would be happy. Goodbye. Take care of yourselves. Bye-bye.